Major U.S. indexes ended the week higher once again. The Nasdaq gained 2.25%, while the S&P 500 and Dow Jones advanced 0.72% and 0.75%, respectively. Small-cap stocks, however, declined 1.35% for the week. International developed markets also slipped 0.45%, while emerging markets gained 0.89%. October, historically the most volatile month of the year, is now in the books. Investors faced heightened volatility amid the ongoing government shutdown, labor market concerns, renewed trade tensions with China, and expectations for an interest rate cut. Despite these headwinds, major indexes ended the month in positive territory. Both the S&P 500 and Dow Jones rose more than 2%, while the Nasdaq gained 4.7% for the month. Due to the government shutdown, investors did not receive the Q3 GDP estimate last week. This week's key economic data releases will offer fresh insight into the labor market and the health of the consumer. On Tuesday, November 4, the JOLTS report, Job Openings and Labor Turnover Survey, will shed light on labor market dynamics. Then on Friday, November 7, the Jobs and Unemployment Report will provide a broader view of employment trends, while the Consumer Sentiment Report will highlight shifts in household confidence and spending outlook. Last week marked the busiest stretch of the Q3 earnings season, with most of the Magnificent Seven companies reporting their quarterly results, showing overall strong performance. The monthly unemployment report is scheduled for release this Friday. However, if the government shutdown continues, the report will likely be delayed again, leaving the Fed, economists, and investors without crucial insight into labor market conditions. This would mark the second consecutive month without jobs data. The Federal Reserve concluded its two-day policy meeting last week with an expected 0.25% interest rate cut. Fed Chair Jerome Powell emphasized uncertainty around the potential for another rate cut in December, citing both a lack of consensus among Fed members and limited economic data due to the ongoing shutdown. GOOG, Alphabet, was one of the standouts of the Magnificent Seven earnings reports last week. The company delivered better-than-expected quarterly results, highlighted by a record-breaking $100 billion in quarterly revenue. Additional highlights included a $155 billion backlog and 34% growth in its cloud business. Three shares gained 4.40% for the week. AAPL, Apple, also reported better-than-expected earnings, driven by a boost in iPhone sales. Earlier in the week, Apple reached a $4 trillion market capitalization, becoming the third company in history to do so. Following Microsoft and Nvidia, 0.5 shares rose 0.58% for the week.